What can we expect from the precious and base metals markets this year? My guest now at the Metals Investor Forum is Eric Coffin. He's a well-known newsletter and a keynote speaker here. Eric, welcome back to the show.
Thanks for having me.
Always good to have you on.
Yes.
I like speaking with you to kind of get a gauge of where we're at in the precious and base metals market. So,
well, you know, it's been a funny year. I mean, we're only a sixth of the way
we're only
into
starting
it.
March.
But you know, if you went back to early January, I think it's fair to say there was broad consensus that, you know, the trade problems between China and the U.S., Euro's slowing down, China's slowing down, base metals were looking a little bit sketchy. Gold, on the other hand, was having in the middle of a nice run, thanks largely to the Fed turning really dovish. And the point I made back then was, you know, really everyone on Wall Street, being Wall Street type guys, they were all assuming, well, you know, the Fed's gotten really dovish and really accommodative because we're special snowflakes and he's doing it for us. Well, no. The fact that Wall Street was diving probably factored into their thinking, but I actually believe Powell when he says, I'm not going to get that dovish that fast just to make a bunch of Wall Street traders happy.
Right.
That's not the reason. There was other stuff. And as you see what's come out over the last couple of months, I always make the distinction, and I did in the talk I did this morning, when you look at economic readings, when you look at economic stats, they very broadly fall into two categories. There's sentiment-based, there's hard reading based. So something like, you know, consumer sentiment is basically it's an opinion survey. You know, how do you feel? What are you going to do in the next 6 months? I'm always very leery of those because I've found in the past that when you look at things like consumer sentiment and consumer spending, the correlation is not that great. I mean, what people say they're going to do and what people actually do are quite different. So when I look at hard readings over the last 2 or 3 months, they've been much worse than the sentiment readings. So I've been sort of going, well, I think what happened with the Fed is I think they're seeing, because they see this stuff first, I think they're seeing that incoming data, and that's why they got accommodative. It wasn't just because the SPX dropped.
Yeah, so you wouldn't rule out a recession for the U.S.?
I think I'm probably I may be a minority of one in thinking that I wouldn't be surprised to see a recession start in 2019. I'm not saying next week, but Q3, Q4, it would not surprise me. And I'm not, just to be clear, you know, I'm not expecting anything apocalyptic, just garden variety recession.
Okay.
And it's hardly shocking when you think how long this expansion has been, law of averages.
But yet you still feel gold will flip-flop.
Yeah, if you look at just the last little while, you've seen, you know, it started out with base metals weak, gold strong. Just in the last couple of weeks, things flipped a little bit. And I think that was, I mean, on the base metal side, I think it was a couple things. One is simply that, you know, well, the trade situation, it's not solved.
Yeah.
Coming out of the last set of meetings, it certainly sounded like, you know, Washington, you know, they basically said we're going to put off the next tariff jump. I mean, it sounds like they're trying to work something out. It's certainly not nearly as hostile as it was 3 months ago. The other thing is there are real signs, for once, of some bottoming in China. China's been decelerating for years, really. It's really only in the last 2-3 months we've seen things like significant increases in lending. And lending, China's very much a credit-driven economy, so lending, expanding or contracting, that's pretty much the whole ballgame over there. You've seen an increase in credit quality, which we haven't seen for a long time because credit quality has been getting worse for years there. And I think that combination, you've seen that on the base metal side. The base metals have all had a pretty good move in the last little while, whereas gold looks like it might be topping. And I think we're just going back to the whole risk on, everything's wonderful, who needs gold?
So in the base metals camp, is copper the star for you? Is that the one to watch?
Copper is the star for me. It's the one I have the most comfort with the supply-demand situation. I mean, base metals, you know, understand that I'm saying that we might get a mild recession starting later this year. Base metals are pro-cyclical, so we get a recession, they're all going to get whacked a little bit. But if you look at the medium long term on copper, supply-demand situation looks fantastic if you're an investor. There simply is not enough in the pipeline. And one thing I'd point out with copper is if you look at some of the biggest projects in the pipeline.
So how do you like investing in copper? Like which projects do you like?
I tend to, I've got, you know, I tend to work at 2 or 3 different levels, and subscribers can decide where they're comfortable. I mean, I'm following a couple of, I'm following Excelsior, for instance, which is basically permitted finance. They're building it. I like that because it's low capital intensity, it's low operating costs. It's still quite cheap. The valuation's quite low compared to the NPV in their feasibility study. I like Scale too, another company I like a lot. Again, because really strong technical management. They've had big successes in the past. It's a company called Regulus. Regulus just actually put out a new resource estimate last night actually. 500 million tons, about 0.7 copper equivalent. It's in Peru. It's too complicated to talk about in a short video. I mean, it's got a couple of issues with high arsenic there, but this whole region is high arsenic, so it's one of those things that I think the big boys are going to deal with because they want access to these, and it's by no means drilled off. I mean, I think that project is going to be 1 billion tons plus.
And Eric, on the precious metal side, in gold, do you like investing in the miners, or are you also buying physical?
I own a little bit of physical, but just my personal preference has always been for the rolling the dice, swinging the bat, however you want to take it. I mean, I have several good, strong development stories on the list because I like to have those there for subscribers that don't really want to be betting on drill plays. Personally, I love betting on drill plays, so I've got a lot of early stage stuff on the list too.
In the precious metal space, is gold your favorite right now? I mean, obviously palladium's having a really good moment.
It is, but there's not a lot of ways to play it, unfortunately. I mean, palladium's one where it might make more sense almost to play the metal because good equity stories with a really strong palladium company, there's just not many around. They're pretty few and far between. I mean, part of the reason it can be argued why palladium's doing so well is because there are so few of them.
So copper and gold, your two top.
I would say copper and gold,
All right. Eric Coffin, thank you so much for joining us. And thanks
Thank you,
for
Daniela.
watching. We'll have much more for you on Kitco.com. Thanks, Eric.